Good morning, everyone. It's Brian for your midday U.S. stock market update for Monday, June or July, I think it is. Yeah, July 23rd, I think it is. Something like that. It's been kind of a blur the last couple of days. So Dow, 32,000. What happened to 32,185, where we were 185 points? What happened to that 185 points? It fell apart going into the close on Friday as everybody left the market like they're supposed to if they're a trader, and it hasn't come back. Why hasn't it come back? So there's a little bit of data sets that are starting to scare a hell of a lot of people out here. On Zero Hedge, where I go to read about economic data and all of this stuff, 24% of car loans, specifically car loans, in Washington, D.C. are in default. 24%. That's our nation's capital, where everybody works for the government. So if people can't make their car loans in Washington, D.C., 24% of the people can't make their car loans in Washington, D.C., how bad is it everywhere else? If we're just getting the data, it's about 10.7% in Los Angeles so far. 10.7% of the cars on the road in Los Angeles are in default. Think about that for a second. So what happened? We had the auto industry, or the dealership group, had petitioned Congress many years ago, about 10 years ago now, to lower the standards of oversight so that they could just go loan to everybody. And the government agreed with that. So they were loaning to everybody. And the average price of a new car in the last 5 or 6 years has gone from $38,000 to $54,000. So people were borrowing more money for longer terms because, as you know, all the dealerships are sitting there saying, we can finance it for 7, 8, 9, 10, 12, 14, 27 years on a new car now. And people were signing up in droves to go and buy $50,000 and $60,000 cars. And then used car prices, demand shrank because people were keeping their new cars longer. But what's really striking is the average age of a car on the road in the United States is 14 years. My brother's business in the auto service business is soaring. Of course, he can't find anybody that wants to work either, which is a challenge because he can't do all of the jobs himself. So anyway, that's one of the data points. The other thing that was very, very funny that comes out is that this week on Thursday, they announced second quarter GDP. And as you know, by definition, a recession is 2 quarters. It's always been, historically always been, 2 quarters of negative GDP. 6 months of negative GDP growth in any country is a recession in that country. Definition of depression is 4 quarters, back to back, added together more than 10% becomes a depression. Where are we at? By Thursday, as you know, because you watch this, I have always been saying by Thursday, we're going to be halfway to a depression. And this week, the Federal Reserve, yay! Those wonderful pointy-head people who are trying to crush us, like a bug, who gave us life after 2008, but now are trying to take our life away in 2022, are going to raise interest rates supposedly another 0.75%. Okay, great. So our costs are soaring on everything. Our income, 38% of working age Americans aren't even working. The government keeps telling us that there's all these open jobs, tons of them, tons. Everybody should be working by now. But Facebook just came out and announced, we're not going to hire anyone. Google just came out and announced, we're not going to hire anyone. We're getting rid of our buildings. We're getting rid of our real estate. We're closing everything. Shit, it's bad out here. And yet, we're expected to think that everything's great. Does it make any sense? No, it makes no sense. The market made sense. It rallied to 32,134. That made sense. It was in the cards. Now where are we at? We're in this we don't know area. We're waiting on data to tell us what to expect. So it is very interesting when Google comes out and says, we're not going to hire anybody. Okay, then I ask the question, have you deleted your 77,000 jobs that you have advertised? Have you deleted them so that the government comes in and says, well, wait a second. There's 77,000 less jobs out there. That's scary to us. No, they keep them on the internet. You can put anything on the internet. I could put this video out there 77 million times. Think about that for a second. I've got 10 job openings, but I can create 10 more job openings, even though I don't have job openings. I can run ads for job openings that I don't even have. I could go in and I can say, hey, I'm hiring. I need an office assistant. I need a car driver. I need a mechanic. I need a dozen more realtors. I could put 15, 20 jobs on the internet. Does that mean that I'm hiring? No, it doesn't mean that I'm hiring at all. It just means that I posted jobs on the freaking internet. And that's the data the government picks up. And that's the data that, but there's all these open jobs. It can't be a recession because there's all these open jobs. Yet 38% of working class Americans aren't even working. And 24% of car loans in Washington, D.C. alone are in default, 10% in L.A. What? How many mortgages are now falling underwater? We're waiting for that data too. So the government has come out, Janet Yellen's been all over the place. What a trickster that person is. But anyway, she's been all over the place saying, we're not in a recession. We're just definitely, it does not feel like a recession. Well, Ms. Yellen, yes, of course, it doesn't feel like a recession to you because you make over $375,000 a year. It doesn't seem like a depression to you or a recession to you out there at all. And you've got a portfolio probably worth $10, $15, $20 million by now because you've been ingrained in Washington, D.C. your whole life. You're part of that swamp. So how is it that we're supposed to respect you any longer, Ms. Yellen? How is it? How are you so detached from what's going on in Iowa? How are you that detached? How is it that you can look at all of this data and say, things are really, really good out there? It's not that way. So at the end of the day, we're waiting for Thursday's data on recession or not recession. Since the government's already out there telling us it's not going to be a recession until we tell you it's going to be a recession, we're not going to tell you it's going to be a recession until after the midterm elections when the Republicans take office. Then we're going to be all over the place. Recession, recession, recession. It's a Republican recession, 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 recession. Well, congratulations. We're in recession now. All of the data sets from us real people feel like it's a recession. We're all feeling it. We're all running from it. It's a recession. So that's what's also impacting the stock market today is there's a lot of data in front of us. Let's take a couple days, have some pina coladas, take our profits from the run that we've just had, and just relax for a little while until we see what's going on with the data sets. So that's what's going on out there in the market today. It's not a day to be trading. It's probably not a week to be trading. Now, my longs in Occidental Petroleum and my longs in ExxonMobil are doing really well. But I expected that. My long in Real Realty is not necessarily doing very well because the real estate market is getting crushed out there in the United States of America. It's getting crushed supposedly across Canada. It's doing exceptionally well here in the city of Windsor because of our weather. And all of the retirees moving here so that they can catch up with guys like me and help them to understand all this finance stuff so they can go play golf on beautiful days like today Not a cloud in the sky. It is a little warm out there, but it's not too hot. I think it's gonna be 85, 86 today, and our humidity is not high at all. So it's a beautiful day out there. It's beautiful, stunningly beautiful day out there today. So get out there, do something, take the day off, go have a pina colada, a margarita, whatever, take your gains, enjoy your gains, go do something with your gains, take an extra class. I just re-upped for another designation myself. It's what I do. I add more knowledge so that I can help more people. It's what you should be doing too, because you're gonna need that knowledge as this economy crashes. So we're seeing in Windsor, lots of safety. Windsor real estate market was $619,000 average selling price last week. That's why the Canadian press doesn't report anything about Windsor. And it's just funny, this press stuff, it is just comical. It's like, oh, we can't cover that city because things are good there. Oh, let's cover Peterborough then. Oh yeah, things are sucky there, let's cover that. Okay, great. So Windsor is now writing articles about Peterborough's real estate market, apparently. So don't expect too much here. No news until later on in the week. The market will rally, of course, like it always has, off of the Fed Reserve raising interest rates 0.75, because the market theory will be, oh my gosh, they've got to raise and crush the market. So that means profits are really, really good. And next week, of course, all of the oil majors report their earnings, which are going to be soaring earnings. And then, of course, Joe Biden's going to be healthy then after COVID. And his wife might be healthy then after COVID, because she's got COVID now, apparently. And so at the end of the day, then Joe Biden will be out there after he recovers saying, these profits from all these corporations in America are just so obscene, I'm going to tax the hell out of them. So I'm going to live in a dictatorial state in the United States of America, because my fearless leader, the Emperor of the United States of America, has decided that nobody should have any profits, or those are obscene profits, that a company should only make $1 million a quarter. They shouldn't make $16 billion, as what Exxon's going to end up making, roughly. But I like my Exxon shares. I'm getting ready to probably sell them. They're hitting their targets in the trade that I was otherwise expecting from the spreadsheet. I might hold them a little while and put some downside protection on. But my Oxy shares, 63.50 today. They're going to 70 next week probably. And there's a specific thing that I have in mind for my Oxy shares. I'm going to sell the covered calls on them to get some revenue in. And I'm going to hold my Oxy shares. I believe there's more to the story for Oxy that's going forward, even if we go into a recession on Thursday. So that's the data set for today. Take some time off, relax, have fun. See you later. Bye. Thanks for watching. I appreciate all of your viewers. Like this page, subscribe, let people know about this page. Have a great day. Bye-bye.